The automotive industry, it's a double-edged sword. It's going to be some really good times for some people and really tough times for others. Stay tuned to see where the opportunities are. Hi, I'm Pat McGibbon. I'm here to talk about the U.S. manufacturing technology orders report for August. August orders were $366 million. Now that's down 2% for the average over the last 12 months, suggesting we're still on a sliding side of the scale of the business cycle. When you take a look at year-to-date numbers, orders for the first 8 months of 2019 are down 14% based on dollars versus the first 8 months of 2018. Looking at the unit side, units are only down 10% for the same time frame. It suggests that things are beginning to firm up a little bit on prices and that demand is beginning to also firm up with our customer base. So where in the customer base are these opportunities? Aerospace is up 30% in August relative to July and is doing relatively well compared to the rest of 2019. We've heard recently from experts that Boeing and Airbus are continuing to build out aircraft and airframes. Boeing doing it even though some of these 737s can't be delivered because of the software issues that have not yet been resolved and approved by the FAA. But there are expectations, according to most of the experts, that this software issue will probably be resolved before the end of the year. We'll begin to see some of these deliveries happen, and they'll probably even begin to accelerate the production process shortly after that. What impact will that have on capital spending? It can only be positive. As we look at some of the other key industries, off-road and highway construction, as well as the fabrication houses, we're up by very significant numbers in August relative to the rest of the summer. And actually better than what they were in the first or second quarter of 2019. So we have some really positive outlooks with those particular sectors. But as you can tell, if you're down 14% in dollar volume for the first 8 months of the year, there's got to be some places you're not doing very well. And in the auto industry, when it comes to the materials removal sector of the machines, we're doing horrible. It's down dramatically from where it was in the first half of 2018. And when you take a look at how well we did in the second half of 18 with the automobile industry, we can only expect this number to get worse on a year-over-year basis during the course of the next 6 months. But on the material shaping side of the business, the fab and form machines, actually the automobile industry is doing very well. There are backlogs for presses, and the demand for products to produce and use dies for the automobile industry is very strong. Fabrication shops, their activity is up dramatically, and we're seeing a significant improvement over the first half of the year, in just the first couple months of the second half of the year, for the demand for fab and shape machines for the fabrication shops. HVAC and refrigeration equipment are doing very well as well. Home building has held up fairly well, staying well above 1 million units a month. And we're hitting a replacement cycle for the appliance industry. So there's been a significant rise in the demand for form and fab equipment from the appliance industry as a whole. And then a surprise, the defense industry seems to look very healthy as well. As we get closer, of course, to October, we see a lot of spending as people try to spend the money before it's returned back into the production cycle and before they get their next budget cycle starting on October 1st. So moving away from the industries that are looking really good here in the summer, taking a look at what some of our friends are saying about what the outlook is. We just finished the MT Forecast Conference last week, and the three forecasters that were there, I would say we're looking at a pretty optimistic outlook. But while they're looking for things to be down in 2019, anywhere from flat to 15% down, as they look out to 2020, they're looking for things to be slightly down from 19 or up by high single digits. These are really good signs because when you take a look at 2019 relative to 18, even if you're off by 15 to 20 points, you're still talking about one of the best years in 2019 being one of the best years since the downturn in 2009. And if you're flat or better than that in 2020, you're on the way back to a really good profitability and revenue year for metalworking technology. As we take a look at some of the other things that's happened, we just recently got back from EMO. If you've read the market data review column in AMT News, you'll see that things aren't too optimistic at the current time. But meeting with my counterparts at over a dozen different trade associations that represent manufacturing technology around the world, Most of them are looking for a recovery in some of the European countries as early as this winter, and that would take a lot of pressure off the U.S. market here. If people were looking to increase sales there, they won't have to rely as much on one of the strongest markets, even if we're in a downturn, still one of the strongest markets in the world. As we take a look at what's going on in Asia, their recovery is going to be a little bit longer. So the expectations that sometime between June and September of next year, we should have hit our bottom and begin to make an upturn towards increasing orders is something I think that is very reasonable and was something that was fairly consistent in the messages we heard last week. You probably have heard that we've either signed a trade agreement or actually we signed a letter of intent to complete a trade agreement with Japan. Relatively interesting. Looks like we'll see tariffs in manufacturing technology drop relatively significantly, if not to zero, over the course of the next few years. But what's more importantly is that the agricultural deals and some of the other negotiations, particularly in the auto industry, will create greater opportunities for us to sell our product, our capital equipment, our productivity technology into some of our key customers here in the United States, as they're likely to see an increase in their exports to Japan in their particular products. So when you put it all together, things are looking pretty good. August orders are down, and we see that trend of declining orders continuing to at least the end of the year and probably into the beginning of 2020. But all the experts are suggesting that by the time we get to IMTS 2020, we'll either be in the middle of an upswing or beginning a pretty significant upswing to finish off the year. And that 2021 looks like it'll be another positive growth opportunity for our industry. So until next month, when I'm here to talk about September U.S. manufacturing technology orders, I hope you spend the time rooting the Nationals into the World Series, as I will be. And I will be here to talk to you about visits out into the homeland and share with you some of the stories I've heard about where the opportunities are and when the turnaround's about to begin. Till then, have a great fall.